Let's be real, ICT strategies are all over the place right now. But most of them are complicated, confusing, and honestly, a nightmare to trade live. But after tons of backtesting, live trades, and a lot of trial and error, we've cracked the code. Today I'm breaking down 2 insanely effective ICT strategies that are actually simple, make sense on the charts, and most importantly, they do work. In this video, you will learn the psychology that makes them powerful, how to spot them in real time, and exactly how to trade them like a pro. This isn't just another video. This is straight up real-world trading sauce, so stick around. And I promise, by the end of this video, you'll see things a lot clearer. If you happen to find value in this video, please don't forget to hit the like button, subscribe, and turn on the notification bell to get notified when we upload a new video. Now, let's get started. Now, let's kick things off with one of the most intriguing setups in smart money trading, the turtle soup setup. This strategy is a clever combination of market direction, liquidity hunting, and fair value gap entries. A high probability bullish turtle soup occurs when price dips below a recent low, or a cluster of lows, grabbing liquidity, all while resting just above a bullish fair value gap. On the flip side, a bearish turtle soup forms when price sweeps above a recent high or multiple highs, tapping into buy-side liquidity, while aligning just beneath a bearish fair value gap. But here's where it gets really interesting. The psychology behind it reveals the hidden intentions of smart money. Imagine the market moving in a strong uptrend. Now, if smart money wants to buy in, they need one crucial thing: sellers. And where do they find these sellers? Exactly, in the pools of liquidity that form below every swing low and above every swing high. You see, retail traders who entered long at these levels often tuck their stop losses just beneath those lows. So when price returns to these zones, stop loss orders build up, along with fresh orders from breakout traders. Once price gathers enough of that liquidity, it gains the fuel to make a powerful move higher. If not, it keeps falling, stacking even more liquidity in its path. And this is precisely what makes the turtle soup setup so powerful. It doesn't just guess where price might turn. It hunts for liquidity, uses it as energy, and aligns it with fair value gaps for high probability entries. What's even more compelling is when a fair value gap is positioned just beneath that liquidity pool. Now you've got a situation where price is likely to break below support, trigger stop losses, tap into the fair value gap, and then boom, sharply reverse upward. That liquidity grab fuels bullish momentum, pushing price back in line with the trend. So what makes this strategy smart? It lets you trade with the trend, but with precision. You're not entering randomly, you're using both liquidity zones and fair value gaps to pinpoint high probability entries. Take a look at this example. The overall trend is clearly bullish. Now, typically, breaking below a recent low might suggest a bearish shift in market structure. But look closely, just to the left, there's a fair value gap sitting right below that swing low. That subtle clue changes everything. This small detail increases the chance that price will dip below the low, tap into the liquidity, and then reject the fair value gap, continuing higher. Watch how price forms a liquidity pool right above that FVG. You can see that the price sweep sell-side liquidity reacts to the FVG and then drives upward. Of course, no strategy works 100% of the time, but the turtle soup setup is uniquely effective at catching false breakouts, giving you the edge to ride the trend as price snaps back with momentum. Now let's move on to the most precise smart money strategies. The silver bullet trading setup. This method skillfully blends liquidity grabs, market structure shifts, and fair value gap entries. In a bearish setup, price first pushes above the day's high, sweeping liquidity from those highs. This indicates that the market is actively targeting liquidity sitting above the key structure of the day, usually the highest price traded during the Asian or London sessions. Once that liquidity is cleared, we wait for a market structure shift that turns bearish, hinting at a potential reversal. This confirms the up move is likely ending, and sellers are stepping in. That's when we hunt for a fair value gap, the sweet spot for a short entry. What drives this strategy is smart money psychology. When big institutional players want to sell, they don't just enter blindly, they need willing buyers. So they push price above the day's high to trigger stop losses and bait breakout traders into going long. Once they've collected enough buy-side liquidity, they reverse the move, sending price sharply downward, targeting the sell-side liquidity beneath the day's low. The same concept applies in bullish conditions, but flipped. Price first dips below the day's low to take out stops, then we wait for a market structure shift upward that signals a reversal, and prepare to enter long. To start trading the silver bullet strategy, pull up any chart on TradingView and set your time frame to 5 minutes. Right-click anywhere on the chart and go to Settings. Under the Events tab, turn on Session Breaks. This will create vertical lines to separate each trading day. For this example, we're using the Australian dollar with the US dollar 5-minute chart. Step 1. Mark the day's high and low before the New York session opens. At the top, we mark the highest price during the Asian session, and at the bottom, we mark the lowest price reached so far. As the New York session begins, price makes a sharp move below the day's low, but quickly rebounds back into the range. This is our first clue, a classic liquidity grab. But to confirm a true reversal, we don't rely on just one signal. We need to see a market structure shift, where price breaks above a recent supply zone. Watching closely, we see price drop even lower and again snap back into the range. But this time, it pushes past the most recent supply level. That's the confirmation we're waiting for. The reversal is real. So where's the actual entry point? The reversal move leaves behind a fair value gap, a clean demand zone. If price returns to this zone, we prepare to strike. Set a buy limit at the start of the FVG and place your stop loss just below the swing low. For targets, aim for the next key resistance levels up ahead. This gives you a precise, structured way to enter with the trend after the reversal is confirmed, not before. Let's recap the silver bullet strategy step by step to make sure it's locked in. Step 1. Mark the day's high and low before New York opens. Step 2. Wait for a liquidity sweep above or below these levels, and then watch price return back inside the range. Step 3. Look for a market structure break, either above a supply zone in a bullish reversal or below a demand zone in a bearish one. Step 4. Locate the fair value gap left behind by that move. That's your entry zone. Then set your take profit at significant resistance or support levels. Simple, structured, and powerful. Go ahead and join our Telegram channel and get access to high-quality expert-curated trade signals every single week. But that's just the beginning. For those who want even more, our VIP signal channel delivers the most premium signals with even higher accuracy and more frequent trade opportunities. Don't settle for average trades. Join a community that wins consistently. So, click on the link in the description below to join now and start capitalizing on the market like a pro. If you found value in this breakdown, do me a favor. Hit that like button and subscribe to the channel. Your support helps us to keep sharing these advanced trading insights on YouTube. Still have questions? Drop them in the comments and I'll personally help you out. And stay tuned. I've got another powerful concept coming up in the next video to take your trading even further. Until then, trade smart, stay disciplined, and keep learning.